Well, he's not perhaps, but indeed the foremost authority of the banking sector. Mr. KVK Kamath has seen many twists and turns in the banking sector. He understands the nuances and the dynamics which are at play in terms of interest rate dynamics, compulsions of the regulator, and what Reserve Bank of India has demonstrated in their ability and the capability to keep Indian regulatory system strong. But every time when there is a change of guard, we always go to Mr. Kamath to understand what does this change mean. What will change, what will not change, and what should change. Let's take that conversation with Mr. Kamath forward. Mr. Kamath, good afternoon, sir. So nice to have you back on ET Now.
Hi, good afternoon, Deepak.
So in your understanding, sir, we are looking at end of an era. Shaktikanta Das, he's been rated as the best central banker for 3 years on the trot now, and everyone will miss him.
Yeah, I think indeed what he has, the steady hand that he has had over the last, his entire tenure, and particularly post-COVID times and last 2 years, is remarkable because that doesn't happen for that longer period. He had to manage multiple challenges, admirable. So I think we all owe a big thank you to Mr. Das.
At Reserve Bank of India, Mr. Kamath, while it is a organization which is built on a framework, but personalities also have had a very large role to play in the functioning of Reserve Bank of India. So now that we have a new boss at RBI, what to your mind will change and what will not change?
See, I had the privilege of actually looking at Reserve Bank closely from 1996 when I returned to India. And I find that if I look at the governance system, there's always continuity. And the institution itself is an institution which stands for firm policy and provides continuity to the system in the country. Primarily, I would believe that would continue going forward with whoever is the governor and with Mr. Malhotra there, Governor Malhotra there. I think we are in very good hands because he brings several, I would say, set of experiences. One, he brings an experience leading a financial institution. I can't if I try to remember, I can't remember any other governor who actually led a financial institution. Then he led the Department of Financial Services. So that was second. Then, of course, he was the Revenue Secretary of the country. And then, of course, I would take a very, I'd say, it's an important aspect of Mr. Malhotra's background. He's an engineer with a background in computer science. And that's what today really is key in the financial sector, not only in India, but globally. So we have somebody who has gone through several experiences of leadership and understanding government, and with a background which is very appropriate for today's transformative opportunities. I don't want to say challenges that we have in the financial sector.
But Mr. Kamath, the way economics can be interpreted, there are a lot of ways. The way policy can be, conducted, there are several measures. It is widely believed that a change of guard means a new thinking. New thinking in terms of innovation, new thinking in terms of interest rate dynamic, new thinking in terms of how to control inflation and how to kickstart growth. What to your mind could be a big departure from Mr. Shaktikanta's regime to now?
No, I think, you earlier in your comment said that here we have Mr. Shaktikant Das, who has been selected in his own way as the best governor for 3 years running around the world. I think there are a lot of things that he has laid down, which there's an agenda which the Reserve Bank can drive going forward. See, to me, economic policy, monetary policy is one set of equations. Other set of equations is to look at opportunity, which is now in terms of using new tools, using new instruments, using new types of approaches to do things. And I think all that is there on the table for Mr. Malhotra as he comes in, because India has set the path on these. It is not as if it's a closed door. It would be a great see how this could be further rolled out in the country. So these are exciting times for India with a long runway. It's exciting times for what's happening in the financial services sector. I'm sure Mr. Malhotra will, marshal all these things and then drive business as drive the
Water, sir, I can come back to you for a question. Would you like to have some more water?
Yeah, go ahead.
No, would you? Are you okay? I mean, you can always take a break for water, and I can come back to you in a minute.
You could go back. You could go ahead.
Okay. Thank you very much. I think it's the weather which is affecting everybody. It's chilly and quite cold in Bombay.
Yeah.
2 days temperatures dropped by 10%, so everybody's having this catch in the throat, as they say.
Indeed. Go ahead, Nikunj.
Okay. Mr. Kamath, the priority should be to get growth back, with this GDP growth back above 7%, because that in a sense is the base. Do you think the priority should be to keep inflation closer to 4%, or the priority should be right now to defend the rupee and ensure that the decline in rupee, if arrested, that will take care of everything indirectly?
I think a very interesting trinity that you have put forth there. This is the trinity that all governors deal with. I think the art is in keeping these in balance. And I'm sure Mr. Malhotra will find a way to keep these in balance. But having said that, if you look at in the Indian context, none of these are actually out of control. We have had interest rates which are not really out of control. We have inflation also, which has been in control. Yeah, some moments upwards and down, but not gone out of control. Reserve Bank has always been able to control it. Exchange rate also, if you look at several currencies around the world, we are not done as badly as other countries. So within limits, I think the exchange rate has worked very well. I would think that, and then you mentioned growth. To me, growth at times is also goes through cycles. And we have had 2 quarters where things slowed down and then it surfaced in the last quarter. To me, it is transitional, with the government spending coming back and expected to stay strong as we go along. Growth should come back. So let us look at the parameters for growth in India. The runway, nobody doubts it exists. The runway is the unfinished agenda for India. And if that exists, rest of it follows. There may be minor ups and downs, as we are now probably looking at it. But I would think these are transitional. As long as policy remains steady, the players in the system, whether it is corporates or the banking sector, remain healthy, then I think nothing stops nothing can stop our growth. Now, if you look at what the Reserve Bank has done in the past, it's exactly that. Try to keep stability without getting carried away by short-term movements. So I'm sure as a country, this is how we will grow, and we look forward to a time of sustained growth.
Mr. Kamath, rightly or wrongly, but Reserve Bank of India on one front, in a sense, has been criticized that they have been tightening the liquidity. Credit has not gone below a certain threshold level, which is what we say in economics, bottom of the pyramid. And the evidence is there. If I look at rural demand, if I look at two-wheeler demand, if I look at even soap and shampoo demand. Do you think this is a place where we need RBI policy to change and tilt, especially in the area of pushing credit down or making credit available at the bottom of the pyramid?
Nikunj, as I see, I'll break it into 3 parts. A large part of momentum is provided by government spending in India. So that clearly we know was slow. That clearly we know is going to come back, because that's already happened from the aggregates. If you see, the aggregates are drawn down. So we should see that impact in this quarter and the coming quarter. So that's number one. Second, if corporates are starved for credit, then you have a situation where, yes, liquidity has to be injected. But honestly, I have not seen corporates starved for credit. Why? because corporates have never had balance sheets as good as this. In my 50 years, 54 years to be precise, of being in the financial services business, I have not seen corporate balance sheets as good as this. Corporates throwing out or throwing up as much cash flow, free cash flow, as they are now doing. So there is no constraint there. Thirdly, if you look at the banking side, which could be the provider of funds, again, the balance sheet are pristine. Now, I've never seen balance sheets as clean as this. So given this, to me, whatever challenges are there is transitional. Now, uh, pumping credit without, I would say, being conscious of the risks. And this, the Reserve Bank, you see in the last 6 months, Governor Das has been, particularly on unsecured lending, has been raising a cautionary flag. Clearly, some discomfort is felt on that front, and that could be a reason why there is some set of people who do not have access to funding. But a larger call, would that loose lending actually have done good, or it would have created more problems, which would have required harder steps to resolve. So I think it's a careful balance. But I would look at government spending, corporate free cash flow, corporate quality of balance sheet, and banks' quality of balance sheet. If these are, you give a green mark to this or a green tick to this, then things happen.
A lot also boils down to what kind of forex reserve or what kind of forex reserve policy the Reserve Bank of India really wants to, maintain. We have $650 billion of forex reserve, which is sizable looking at our economy. Do you think that is a good enough number and our Reserve Bank of India should go all out to defend the rupee, because that will automatically take care of a lot of imported inflation?
No, this is again a policy call. Typically, I do not comment on a policy call, but let me look at it in a structural, broader way. Ultimately, the balance will go up and down depending on how strong you are and what you get in as flows. And there, it has been a steady growth over a number of years, and I expect that growth to continue. Without putting a concrete number that we need to have X billion dollars, in terms of reserves, I don't think that's the way to go about it. It will go about steadily. As far as intervening, Reserve Bank intervenes very selectively, and the rest of it, the economy has to perform and showcase the rupee as having strength, and that has been happening. So I think it's going to be judicious intervention as required. Otherwise, let the rupee find its own strength. I'm saying this from past experience, and I don't expect that to continue because this has worked well for us for a very long period of time.
Kamath, we are moving to an era of de-globalization, if I may use that word. Tariffs are a reality now. And when tariffs, they go higher, inflationary threats, they automatically go higher. And that's where I think the world is headed, and that's where I think the hints are coming from US President-elect Donald Trump. What can the regulator do, or RBI do, in this kind of a scenario where you know that some percentage points of growth will automatically get crippled?
Yeah, I think, again, we would need to concentrate on our foundation. And that foundation has to be stable and facilitate our own growth. I will give a counter argument to what you said. In India's context, the runway for growth is domestic. That is very clear if you actually drill down, because there's an unfinished agenda, starting with infrastructure. Now, just imagine this, Nico, that we have now infrastructure for, let's say, a 4 trillion economy. When you look at an 8 trillion economy, and I would look at that as 5 to 6 years from now, the infrastructure aggregates that you require are not double of what it is today. Even assuming that we have everything that we want today, which we are short of what we should have had. But let's assume what we have today is good for 4 trillion. For 8 trillion, it is not double, it is 3 times. Because the aspirations of the people change, money in their hands changes, so many other equations change. And that, to meet those expectations, you will need a whole set of infrastructure outlays, which are far ahead, and infrastructure investments actually on the ground and executed. I'm saying not 2 times, but 3 times. To me, that is opportunity. So we should concentrate on doing what is required for us. Once we do that, then of course aspirations of people at 8 trillion economy, we will need to look at in terms of their appetite for goods, manufactured goods. So manufacturing sector will have to respond. So every area, and I can break it down into development at the urban level, development at the rural level. This is how the engine starts ticking faster and faster. And I'm sure, the regulatory context and the government's context, they recognize this opportunity for growth. That at 8 trillion, and I'm not thinking of beyond that, 16 trillion, at this moment, 8. The requirement that we have for various aggregates is 3 times what we have today. And that itself is a growth engine.
Before we wrap, Mr. Kamath, last question. There were a lot of events which were at play in 2024. It was like a big election year for the world. Indian elections, local elections, US elections. Then somewhere in 2024, inflation topped out and Fed started talking about decreasing rates. 2024 was also a year when we saw a lot of geopolitical moves. What to your mind could be that big event or calendar event which could inject volatility in financial markets in 2025?
Actually, Nikunj, I would look at it the other way. I would think it's now time for stability globally. We have had turmoil now in one way or the other, starting from March 2020. As we get into the 5th year, we need stability. And let me put that in context. I think the medical emergency of COVID is now behind us. The global conflict in Europe should settle with the changes that are happening. I would think this would provide a time of stability going forward. And that plays into what we need at this point in time, stability. If inflation comes down globally, even to lower levels, and the uncertainties across the world again reduce, good for us. So I think the regulators will have more leeway in doing things that they need to do or would like to do. So I see a time of opportunity, and I see good times.
Every time there are doubters, and when I get worried about this going wrong, that impact, how world would move, the first port of call is, please request Mr. Kamath for some time. He will douse the fire, he will clarify all the concerns, and then he'll just paint such a rosy and a realistic picture which will comfort you about where things are moving.
And I'm hopeful it will come true. Thank you.
So here's wishing you a wonderful year ahead, sir. Season greetings from ET Now, and let's hope for everybody on this planet 25 is better.
To you and all the viewers, my good wishes. Thank you.
Thank you very much, sir.
If you like this video, then like, share and subscribe to ET Now.